Well, hello, everybody. This is Michael DeGioia here with the weekly market analysis. And of course, today is our election special. We're going to be covering the week of October 26th to October 30th. And what a week it has been. We're finally getting the market correction that we have been expecting going into this election and the uncertainty event that the election is. As always, I'm joined here with my co-host, Jill Malandrino, from NASDAQ, Global Markets Reporter. And how are you today, Jill? I'm sure you've had a busy week.
Oh my gosh, I can't wait to get to the other side. It has been, there certainly is election fatigue out there. People are Zoom fatigued. And yeah, it's been quite challenging, but the silver lining to this, just like with COVID-19, you live and you learn from these experiences, and it'll be really interesting to see what it's like on the other side. I could tell you Monday, Tuesday, Wednesday for our election coverage, I have a 45 to 50 guests coming on, and the opinions are pretty wide ranging, but we're starting to see some very consistent themes come across over the past couple of weeks of coverage.
Yeah, so I mean, I'm very interested to hear what the consensus is from all of your guests. I mean, obviously, I'm just going to, express my feelings from my own analysis and from what I see going on in the markets. But I mean, basically, the gist of what we're going to be talking about today is what will the outcome of the U.S. presidential election mean for the markets, and of course, what if the election results are contested, that's obviously the scary part of this, is that there is the potential that the election results could be contested. I mean, I know that in kind of crazy news, Walmart stopped selling guns and ammunition, leading up to the election, which is not a good sign. I mean, certainly that means that there might potentially be social unrest if there is a contested election. So I'm very interested to hear what is the consensus of all of the guests that you've been having on over this week, and what are some of their thoughts? And then obviously I'll go into some of the eventualities that I've been looking into.
It's really interesting. Even with market composure, and the way volatility is continuing to be priced in, it seems as if there's been somewhat of a shift to not only just talking about a potential Biden win, but the potential for a blue sweep. Certainly the way the administration has handled the COVID-19 situation is a big part of that. I think if COVID-19 did not happen, I think regardless of how chaotic the administration has been over the past 4 years, that I think, the consensus has been that Trump probably would have been, clear shot for round two, considering the field that the Democrats put up. But I think this is really working against him, the strategy that he employed. And when you think about it through the lens of the market, and I had somebody on from Forbes earlier this afternoon, and, when you think of it this way, Trump touts the market. That has been a very strong point for his presidency. I don't care if you vote red or blue, it is what it is. You can't argue with the numbers. But one thing we have to understand with COVID-19 is that the market is divorced from the economy, even more so, right? I mean, you and I are professionals, we understand this, but for the average person, they don't care that the market was at all-time highs. They need their stimulus checks. They are tired of the infighting in DC. The market was really banking on a stimulus plan, and that entire narrative basically went down the tubes over the past couple of weeks. We do know that we will get a stimulus package either way, probably a larger one with Biden and a full sweep. But the fact of the matter is it's not going to get done until January or February. And the people that need that stimulus money the most, the small businesses and people in the service industry, don't have the luxury of that time. And the market doing what it's doing and being up means nothing to them. And the reason why there's concern there is the jobs that have been lost are not coming back. The businesses that employed those people, a lot of them will not be around by the end of the year. My other concern is corporates are going to understand that they have to right-size their businesses, particularly that we understand how to work in a virtual environment. So it's only going to exacerbate the employment situation. So we think we're seeing this shift where the market's pricing in a Biden presidency because they're looking for some kind of stability. They're banking on the stimulus, and there seems to be this exhaustion of chaos. That's been the consistent feedback that I have gotten. I think another thing that has been helping Biden is he at least has clear-cut policy. He has tried to talk about it. The debates haven't been the best forum for that. But if you go on his website, other areas where he has given public speeches, there's the conversation of policy. I think it's a little bit more clear-cut. Infrastructure, and we'll get into that a little bit later during this, but infrastructure was like the first thing Trump was talking about when he got into office, and it was such low-hanging fruit. Those are the jobs that pay well and you want to create for this country. Nothing was ever done, right? Mm-hmm. So that was, the thing that he had going for him was the market, which of course is not the economy, and then the corporate tax cuts. So when you have Wall Street, like, okay, it's been good for the markets, he's been good for corporates, but I just think there's a lot of exhaustion there, and that seems to be the theme that I've been getting from, the managers that have been coming on my show. Got it.
And so I have to bring this up. I mean, it's just last time going into the 2016 election, mm-hmm. Trump was way behind, right? Nobody thought that he was going to win. Everybody thought it was a Hillary win. And, he blew her out of the water. Okay. Is there a possibility that that's happening here? I mean, there are some potential shockers, right? I mean, like there's a very big potentiality that African-American males might come out in force for Trump, surprisingly. I mean, there's been a lot of influencers that have came out for Trump, certainly. And there's certainly been a lot of news around a couple of individuals who have come out supporting Trump. I mean, the most notable, that's kind of, it's not really like not a huge influencer, but certainly Lil Wayne was on, right, with Trump the other day, coming out for Trump, and certainly Ice-T and others, and 50 Cent. But I mean, is there a chance that Trump could still pull out a win?
Look, there's always that chance, and we saw that in 2016. And there's a couple of things here. Again, if you have to find the silver linings in what's been chaos, is hopefully Americans got the message to get out and vote, right? It's a shame to throw that privilege away, right? Even if you think, well, I'm from a blue state, we know it's going to Biden. If it's for, Florida's a red state, we know Trump is going to win. I don't have to get out there and vote. Well, you know what? That was the mentality that was a big force in the surprise that we saw in 2016. And there's a lot of other things that you need to vote on the ballot for, because what you do locally is what impacts the national scale, right? Yeah. So you need to think about those things. I think another issue that always comes up, and this has been a problem for years, of course, is the Electoral College and the rationale behind that. I don't, I'm not a political expert, but I don't understand one person, one vote. If there's 10 people and 7 people vote for one person and 3 for the other, it's a cut and dry winner. So I think, that will certainly be a debate that's going to continue for quite some time. But my biggest thing is being the leader of the free world. The fact that our election is turning into such a mess, like this is something we'd see in a third world country. This is something that the United States would have stepped into. Yeah. And the fact that it's happening here because we have outside influencers, and then we have spreading of crazy rumors and these conspiracy tin hat theories it's mind blowing to me. Like, what happened to us? So I think that's a big issue. And overall, my biggest concern is the entire world is seeing how fragile we are and where our holes are in the system. And it's a national security issue. So we just have to get back to some level of norm. We have to build up our State Department. We have to have some adults in the room.
I totally agree in terms of the national security issue. I went and voted early. Mm-hmm. The process was extremely smooth. I had moved, so I had to go and fill out an affidavit that I wasn't voting twice. But it was very, very smooth. They looked me up in my old address. They found me in the records. I showed them, that they didn't actually ask for any ID, which, was always astounding to me that nobody asked for any ID to go vote. But needless to say, they found me as a registered voter, and then I just had to fill out my affidavit, and then I was able to vote. Of course, my vote probably won't be counted until way after the election because as a person who moved and had to fill out the affidavit, they have to research and make sure that I didn't vote twice. But needless to say, I thought that the process of voting was very smooth, and there definitely was huge voter turnout. So I went a couple of days ago, and the lines were literally around the block. I mean, I went to the Floral Park Recreation Center, and I mean, literally, the line was throughout the entire park. The voter turnout is tremendous.
Yep.
Which is great.
I look at the numbers that are coming in right now. I mean, it's far surpassed in 2016 the early voter. But that's the whole thing. We have to update the way our voting system works, and we just have to get back to some sort of normal
organization. Of organizational skills. I don't know. But I mean, the one thing I will say is that, what we're seeing, and this is what what my analysis of the election is. To me, whether it's Biden who wins or Trump who wins, as long as we have a clear-cut winner, the United States wins. Mm-hmm. And I think that what I'm more afraid of, and I can see this in the options pricing, is if there is a contested election, and if what happens if it is close, or if there is a split, meaning population vote is one thing and the Electoral College goes another direction, and that would be that would be a big concern, because there are potentially concerns of a violent reaction, civil unrest, things of that nature, and I think that would be where the United States comes out the big loser. Whether Trump wins or Biden wins, I don't think it really matters. America wins. If there is a contested election, I think America loses big time, because obviously the ramifications for the country will be. It's just not happened. I mean, it's never happened in American history where people question the results of the election. So for me, I think that's the biggest play on the market. Now, let's take this one step further. Let's look at the charts a little bit. So, I mean, this is not surprising. I talked about this last week when we had that double top and that lower high. And then, to me, everything looked like it had gotten tangled in its moving averages. That usually is a technical telltale sign that selling is coming in earnest. And I mean, basically, if you look from this week to from last week to this week, we were 100% right in technically talking about that, because the market did roll over in a big way. And that's not surprising. We had a very, very clear catalyst. We have the U.S. election. We had earnings. We had that huge technology earnings day yesterday. And almost all the tech companies came out with earnings yesterday. And certainly a lot of them not being good. Apple, which was good, they beat, but it was down into the details. So tell us a little bit about the details of the Apple earnings. I'm just going to bring up Apple here.
Sure. Yeah. So Apple was interesting. I mean, clearly they crushed on the on the headline metrics. Part of what the issue is they did not issue guidance. Another company like UPS, which is an economic bellwether kind of company, did not issue guidance either. And I don't think that's specific to the companies. I think it really lends to the macro environment where there just isn't enough visibility in terms of how the economy is going to be impacted by COVID-19, and there's not enough visibility in terms of policy, right? And you and I have been saying that since we started doing these 31 weeks ago or whatever it is. I think with Apple, you have to understand is that the replacement cycle actually took place in Q4, right? Because the phones got released in October. Typically, it's earlier than that. So the comp is a little bit off. So I think that could be part of the reason as well. But again, I really think the outlier is going to be consumer appetite and demand. I'm sure a lot of it is predicated on stimulus. I also think it's going to be hard for companies to understand what comping is going to look like in 2021, which is another reason why I think that they're not issuing guidance, because, when this all started with COVID-19 and then once parents understood their kids are going to be working from home, certainly there was a surge in hardware sales, right? 'Cause
They
you had to
saw
get your kids laptops.
IMAX, well, like through the
Right.
roof. I mean, computer sales were huge. It was
Right.
the iPhone sales that had dropped, and
Yeah,
that was
and
a big concern.
because the replacement cycle started in Q4. I believe it's earlier, so the comp is off. But what I'm saying is, so when you look at, if there was a surge to buy equipment at the end of March, and they didn't perhaps have that in Q1 of last year, I don't know if they understand what comps are going to look like. Because if if there was this mad rush to Best Buy and Apple to get your hardware and so forth, typically these things last for a few years. There's no reason why you should have to replace. I just got an Apple laptop a few weeks ago. I'm expecting that thing to work for a few years.
Yep. I bought one in the right in the very. I got an Mac Airbook right at the beginning of the pandemic.
Mm-hmm.
I'm using a Microsoft Surface, but I wanted to have a Mac as well, just to have both. I'm a technophile, so I want to have both operating systems and be good at both of them. So tell me a little bit about Amazon's earnings, because again, I looked at all these earnings and they all looked good. I mean, but they all got smoked with the exception of Google, which gapped up but then faded all day today.
Yeah, and it's really interesting. We took a look at, the top 10 NASDAQ 100 names, and with all, of the headline noise with Google over the past couple of weeks, it actually was outperforming. I think one thing you have to look at, and this is the low-hanging fruit, and I'm not a fan of that term, but just look at where the valuation is, right? It's getting really tough to factor that in. I mean, yes, we understand that trends have been accelerated, 5 years worth of quarters of growth and so forth, but even Apple, the multiple it's trading at versus even just a year or two ago, I think some of the air needs to come out from that, and that certainly is one of the issues. And then here it's a value trade. There's rotation happening. Look, even when we get to the other side of these things, we are not going to stop using Zoom. The cloud is going nowhere. I mean, everybody's going into the cloud. Everything is being digitized. Even think about the IPO environment. I had this conversation with one of my guests today. IPOs were able to get done, and at a rate that was very unexpected, because instead of having to spend all the time and money on a roadshow, you could see 8 to 10 investors in one day. And the other point to that is
Zoom roadshow. Yeah.
Okay, so Mike, think about this, and this is where it gets really interesting for 2021. It broadens the investor base as well. And we're always talking about diversification in the boardroom and, up the corporate ladder. If you get a more diversified investing base, it just continues to improve, the companies that are going to be able to come to market. So which makes it interesting when you think about M&A a year or two down the line. So there's so many awesome things that are happening because of this technology. Why waste the time and money when you can see 8 to 10 investors instead of flying around the world for 2 weeks?
Yeah, you're right.
Zoom is not going anywhere. And what's happening with these products too is Zoom, any of the other competitors, we figured out how to pivot and make it work for 2020. 2021 and beyond is going to be about improving the experience. So what Zoom might look like in 2-3 years from now is not what it's going to look like today.
Yeah.
So it's not going away. You're not going to sell off Zoom because it's just magically going to go away. And I'll tell you something else, Mike, and I don't want to get too down the rabbit hole, just because we get a vaccination in approval, the hard part is getting it at scale and manufacturing it and getting people to get vaccinations. Just because we get a vaccine doesn't mean day one we go back to normal. We're still going to have mass compliance in place, and people are not just going to bum rush to the airplanes. It's going to take time for this to filter through the system and get people comfortable again.
Yeah, not everybody's like me flying all around the country and all around the world. But yeah, you're right. I mean, Moderna just came out that they got they've gotten a lot of orders, something like $1 billion worth of orders, and that they're going to be starting to produce their vaccine. We certainly saw that just having a vaccine available does not affect the COVID numbers, because Russia was the first country to come out with an approved vaccine. And certainly Russia, you can see that their case levels are surging away with the rest of Europe. So just having a vaccine is certainly not going to take the virus and make it disappear overnight. I mean, that's certainly the case that we're seeing. Talking about some other stocks that had earnings, Microsoft also down. Google gapped up, did great considering the investigation, had great earnings, gapped up, and then faded all day. I'm going to go back to Facebook seems to have done really, really well. it held up very well up until today. And then today it sold off with the rest of the markets. Yesterday, we had Netflix news that Netflix is raising their rates. That caused kind of a momentary spike. But then, of course, today, the whole rest of the market kind of sold off and took Netflix with it. Any thoughts on the Netflix price raise?
I don't have too many thoughts around that. I will say that Netflix is kind of in the same situation as what we were talking about with the tech companies where, their numbers might have looked fantastic for this year, but what's it going, what's it going to look like? Right.
And I think that's the entire technology realm. And I think that's part of the reason why we see what we see on the QQQ, which is this, this was the pandemic sell-off. Let me just bring up my laser pointer here. This was the pandemic sell-off. This was us blasting off and the recovery. This was the breakout to new high. This was kind of the acceleration of the technology cycle. And then this was maybe we got a little bit ahead of ourselves. Let's take the money and run before the election. That's pretty much the way I read this. This is a high. When a high doesn't get to the prior high, that's because people are nervous. Traders and investors are nervous. So if it were a double top would indicate that we're uncertain. Maybe it's going to go higher and break higher. But with the election impending, I think that all the traders and investors were like, okay, it got up to 295. I'm not going to wait for it to get to 305 again or 300. I'm taking the money and running now. And that's what we see here. The earnings, that was kind of like the last ditch hope before the election that the earnings were going to be so astronomically good. But I think the earnings ended up just putting the bookend on the tech rally and the tech run because, again, valuations being what they are, I think that the tech will rally again, but at least for the moment, the election uncertainty and the fact that things are up just so much already, I really question, usually this is a time of year that we go into, it's called the Santa Claus rally or the Christmas rally. I wonder, and I really don't know what to expect from the Christmas rally this year. Do you think that the pandemic, the economic problems that many people are facing, there's this whole huge rental problem that everybody's facing, that they've run out of their stimulus, they've run out of money. Do you think that's going to affect the Christmas rally?
In theory, yes, but we know markets can humble you at any point. The concern is with the stimulus delay and facing eviction from the human side of it is horrible. And this is what sets up for a classic recession when people can't get jobs. There is no stimulus. Jobs are not coming back. Rents aren't being paid. Landlords aren't paying the bank. It trickles down and not in a good way. So you would think if people are waiting for their stimulus checks and they don't have income coming in, or they want to save it and are afraid to spend, it's going to impact consumer spend. And 2019 was predicated on the health of the consumer. So you would think in theory that would spook the markets a bit. But again, depending on how the election goes and if that injects some hope, one never knows. Because as we have seen, the market has a very separate reality from the economy and the consumer. But I will tell you anecdotally, I live about 10 minutes from Short Hills Mall in New Jersey, and that is a super high-end mall. We have Chanel, Ferragamo, a Tesla store, Fendi, all of them. And I had to go into unfortunately not to one of those stores, but I had to go into the Apple store this week. It was empty. The high-end, super high-end stores people are just hanging out on their phones that work there.
Yeah, totally empty.
And that mall is notorious for Stepford housewife shopping all day long, right?
Yeah.
They have money to burn and they burn it all day long. And I've never seen anything like it.
Yeah. I've been to a couple of malls, and they're not what they used to be, certainly. So on that note, let's jump right ahead. So, I mean, I totally agree with you. I think that obviously what's going on in the world and the normal cycle of months has been thrown off. Usually, in the most bullish months of the year are November, December, January. Most bearish months of the year certainly lined up this year, being September and October is usually the most bearish months of the year, and certainly that's been the case this year. Usually the summer tends to be flat, but this year we rallied pretty much from March all the way through till August. And so a lot of things have been thrown off. So I would expect the normal rules and the normal patterns and ebb and flow of money not to be in play this year because of the pandemic and the huge interruption that it was. With that being said, if you look at the S&P, and I want to point this out, this is a high, a failure to make a new high. And if we don't hold this support level here at around basically 320, this 320 level at the on the SPY, if we don't hold this level, I mean, the one thing we always say in the markets is a clean move up can lead to a clean move down, meaning that a break of 320 on the S&P really puts us down straight to 300. There's really not much between 300 and 320, which means that potentially whatever goes on with this election, it could be really topsy-turvy and pretty crazy. So certainly I would say that the potential for some drastic moves, especially if there's a contested election, there's a sheer drop from 320 to 300 available on the S&P. In terms of the QQQ, you got a drop below. Basically, it's 260. You know, you pretty much go down to 250, and then below that 240. So again, it's like a 10 to 20 point drop on the QQQ. And then finally on the DIA, we're already basically breaking support on the DIA, which has been the weak man. The Dow Jones Industrial Average, the old economy stocks have really not recovered the way that the S&P or especially the QQQ and the NASDAQ. Here you got a long way down. The next level down here is all the way down to 245, 250. So potentially we may be heading there fairly quickly. So the one thing I will say is that when you see these kind of price voids on the chart, it makes you a little concerned because those kind of big drastic moves can happen, and all it needs is a catalyst. That being said, gold certainly has a clear air to the upside and a run back up to 192 as it's kind of consolidated down. It's held up very well in the sell-off. And the most interesting thing is there's kind of been a bifurcation, meaning Bitcoin and gold had been trading with the markets. They are no longer trading with the markets. Gold is holding its own and staying stable, and Bitcoin is at all-time highs. Certainly, Bitcoin GBTC, which represents it's the tracking stock for Bitcoin. It's it is at all-time highs and looking like it might be breaking up higher towards its previous high when Bitcoin hit around 18,000, 20,000 in 2017. So what that's telling me is that all the positive investment in Bitcoin, the PayPal news, JP Morgan and other banks coming out saying that they're going to be supporting Bitcoin and Bitcoin wallets and digital asset wallets has kind of really given strength to the digital asset market. And of course, gold, the other alternative to keep your money in, if it's not in the banks and it's not in the US dollar and it's not in stocks, potentially maybe if the markets sell off, potentially some of that money will flow into gold, some of that money will flow into Bitcoin as represented by the GBTC right here. Now, let's jump to the if Biden and Trump, let's see what stocks will benefit if Trump wins. Now, the stocks that I put up here, and certainly I'm interested to hear your thoughts, is I put up here Lockheed Martin, Northrop Grumman, Vulcan Materials, Ruger, Smith & Wesson, and then I put Caterpillar and John Deere. the rationale behind these is obviously Trump is going to continue to build up the military. His rhetoric is very anti-China. And of course, people, if there's more civil unrest, people will keep stocking up on their Smith & Wessons and Rugers. The reason I put on here John Deere and Caterpillar is, like you said, he never really improved the infrastructure. So I think that's going to be right on the top of his things to do list, as well as he wants to support farmers and et cetera. So what are your thoughts on that?
Well, if you're concerned about exposure to China, you have to be careful with CAT. They still have a significant business there. And, I agree with you. Lockheed Martin certainly makes sense. And I would also add anything that's related to the space investment, because Space Force has been a big priority. Anything, right. Yeah. Satellite companies, electric vehicle companies, and their suppliers, that entire ecosystem. I would say regardless of who gets in, that space, satellite, EV, and their suppliers are going to be winners for sure, because there's no downside to advancing in those areas, and both sides seem to be in agreement on that. Now, look, you never know what's going to happen. I'm really surprised that infrastructure spend was just not even a blip on the radar, when that was a big part of what Trump was running on. And it seems like something that everybody can agree on. I can understand, because we have the House of Democratic, Congress is Republican. If there's a hard time passing spending bills because the Democrats want more Green New Deal kind of spending. So I could see it being locked up there. So if we were to get a full sweep either way, I think, these are the places that you want to be in that are newer economy. I don't think look what happened with steel companies. They've gone nowhere, right? Steel, coal companies, whereas the investment in EV and newer energy areas is a win. So that's where I would be looking.
Yeah. All right. Let's jump onto Biden. I'm going to come back and I'll look at all the charts once we go through Biden. So here, if Biden wins, we heard this in the debate. The debate, Biden came out and basically said that he's, plans on phasing out, coal and the entire petroleum industry. It was a little bit of, I don't know if he had misspoke or whatnot, but I know he came out very strong for reusable energy. And certainly reusable energy has been running already. There's that trade, the TAN and FAN trade, the TAN being the Invesco Solar ETF, and FAN, First Trust Global Wind Energy Trust. They have already been running. They have sold off recently, but the entire market sold off. I believe that those will continue to resume and continue to run. Solar did very well under Obama, the Obama-Biden administration. And I believe that certainly this would be the direction that he is going to funnel money and give programs and incentives to get towards reusable energy and energy self-sufficiency, or reusable energy self-sufficiency. The United States is already energy self-sufficient. But Deere and Company and Caterpillar, like you said, I would expect Biden to end the China trade deal discussion. It's gone. The China trade tariffs. So I would expect Deere and Caterpillar not to do well just because of infrastructure. I would expect them to do exceedingly well due to the fact that they benefit hugely. They have a huge business in China. And then, of course, the other one that has a huge business in China, these are all Apple, Nike, Emerson, 3M. These are all big China trade deal beneficiaries, meaning if Biden ends the trade problems with China, these companies skyrocket. Now, I would say that I would expect that the stock market would probably have a little bit more of a bump initially on a Trump win, meaning that like it did last time when Trump won, there was kind of the Trump rally. But I don't think that whatever happens, if we have a clear-cut winner, I think that the stock market regains its footing and technology does well, regardless of who wins the White House. I think the only way that America loses, and the market certainly loses, is if we don't have a clear-cut winner. And I think you agree with me on that, right?
Yeah, I definitely do. And I also want to point viewers to another ETF that I think would be really interesting based on the commentary that I made before as it relates to Clean Edge. There's one, the ticker number is QCLN. It's the First Trust NASDAQ Clean Edge Green Energy Index Fund. So this particular ETF tracks the Clean Edge Green Energy Index, that's NASDAQ's. And if you take a look at the performance, right? So we always talk about the NASDAQ 100, how it's outperforming the S&P and the Dow, right? Now this was as of Monday. Of course, there's been market movement since then. The Clean Energy Index is up 92.8%.
Wow.
Versus the comp, or not, yeah, this is NASDAQ Composite I'm referencing, 31.7%.
Wow.
Right. Another one, CLDS, this is the Wisdom Tree Cloud ETF, which tracks one of our NASDAQ indices, is up, or was up, somewhere in the 60% range versus the NASDAQ 100, up about 30%. So these areas that I was talking about before that are not going away regardless if a cure is here or not, you can see the significant outperformance. So I would definitely keep both of those, CLDS and QCLN on your radar.
I just wrote them down, as you saw, from your mouth right to my little scrap of paper, right? The standard scrap of paper. And I think they're going to find their way into our newsletter as well. But that's a great call, because Biden came out very strong in the debates that he's moving in the direction of clean energy. And usually what you find is that money is already moving in that direction, like the TAN and the FAN. It's already been going in that direction. It's probably a nice little pullback to jump aboard that trend now, as the market is pulling back, right? Because we have this big valuation, you have uncertainty. So certainly this is possibly a nice pullback entry on some of those ideas. So thank you very much, Jill, for bringing that to our attention. I'm going to go through some of these charts now real quick, and it should take me a total of 5 minutes. But basically, you can see that Lockheed Martin has been has not benefited from the rally after the pandemic. Certainly, it's not doing well. But if Trump did win, it's kind of at a good place for it to lift off and take off. Vulcan Materials did kind of come back. Certainly, John Deere has recovered well and has pulled back recently, like many stocks have. Let's go take a look at TAN and FAN. TAN certainly has already been running up. I believe that as Biden has been doing well in the polls, that TAN and FAN have been gaining steam and doing better. They did great during the Obama-Biden administration the first time, and they are kind of at all-time highs from what I can remember, or just off their all-time highs. Emerson Electric, again, big China business, they would benefit as well. But again, the charts are all kind of in line with the regular market charts. That brings us to the end, Jill. Okay, yeah. As always, it's a pleasure. It's an absolute pleasure to be here with you. It means that our week has come to a close. Okay, we have one weekend. We have happy Halloween to everybody out there. Thank you so much, Jill, for being here with me today, and have a wonderful weekend and a very happy Halloween. Everybody out there watching us, our November newsletter will be released this Monday, okay? If you do not receive emails from Dash, you can sign up right at our website at dashtrader.com. Subscribe to our channel on YouTube, Dash Trader TV. Follow us on social media. You got LinkedIn, Twitter, Facebook, and Instagram. Certainly follow us at all of those various different venues. Goodbye, Jill. Have a wonderful weekend. Bye, everybody. Thank you for joining us, and make sure you get out there to vote. Bye-bye, everybody.
Take care.
Ciao.